Welcome. This video is about recording transactions in the sales journal. At the end of this lesson, you will be able to define accounting terms related to the sales journal. You will also be able to prepare the sales journal. Before we analyze transaction for recording in the sales journal, let us first define the following terms. Sales journal is a special journal used to record only sales of merchandise on account. A customer is a person or business to whom merchandise or services are sold. Sales tax is a tax on sale of merchandise. This shows the form that we will be using in recording sales on account transactions. To be able to record transactions in the sales journal, let us have the following example. On April 3, the company sold merchandise on account to HTM Corporation $600 plus 5% sales tax. Sales invoice number 101. Requirement: record the above transaction in the sales journal of the company for the current year. When merchandise are sold on account, the seller has to record sales, but at the same time, the seller has to record accounts receivable since the customer bought it on account. But before we record the transaction, it is important that we analyze the transaction in a T account. In this example, we will be using 3 T accounts. We have accounts receivable, which increases on the debit side. We have the sales, which increases on the credit side. And we have also sales tax payable, which increases on the credit side. Based on the transaction, the company sold a merchandise. Since there is a sale of merchandise, there will be an increase in sales. Sales increases on the credit, so the amount of $600 will be on the credit side. As you can notice, there's no amount yet for sales tax payable. So since sales tax payable is not given, we have to compute it. The following is the formula for computing sales tax. Sales tax is equal to the sales multiplied by sales tax rate. $600 multiplied by 5% is equal to $30. So the amount of sales tax payable will be recorded on the credit side of the T account. For the amount of accounts receivable, we have to be using the following formula. The accounts receivable is also the total invoice amount. Invoice amount is a sales plus the amount of sales tax. $600 plus $30 is equal to $630. So we now complete our T account. So that will be $630 for accounts receivable, HTM Corporation. So we are now ready in recording this transaction in the sales journal. The steps in recording this transaction in the sales journal include the following. First is the date. So we have to record the date. The current year. This is April. And the day, which is 3. The account debited, which we will be using accounts receivable HTM Corporation. Since accounts receivable is already in the heading of the sales journal, we will not include that in the account debited. We will just write here the name of the company, which is HTM Corporation. For the sale number, it will be 101 based on our example. For accounts receivable debit, we will try to refer to the T account that we had before, which is 630. We have also the sales, which is amounting to $600, and the sales tax payable credit amounting to $30. And that completes our sales journal.